send it over to CommSec, where Tom Piotrowski is standing by for a look at the markets and what is going to happen this morning. Tom, how are we looking?
Well, Pete, that's an interesting question, which we'll get to in a moment because it's quite a loaded one. But the futures at this stage are indicating that the ASX 200 will kick off in positive territory, albeit by a modest margin of 0.2%. But what we saw in Northern Hemisphere trade was generally a trend where stocks moved higher and we saw interest rate markets contained. The latter point important because interest rates have been jumping around all over the place over the course of the last couple of days. So just to see more of an equilibrium there is welcome. We've got the Dow Jones, the S&P 500 and the Nasdaq each up in the order of around 0.75% with about 15 minutes remaining in the session. It is a matter of seeing some better economic news where activity in the US services and manufacturing sectors were concerned. That was revealed in the data last night, so that was encouraging. But then the earnings numbers, there's been a procession of them last night from names that we all recognise. General Electric bettered expectations by a decent margin, shares up 7%. General Motors not so much, the stock down by around 3%. The United Auto Workers problem for car makers in the US revealed in General Motors numbers. They've pulled their full year earnings guidance because of uncertainty being created by that. So they were marked down on the back of that, even though their earnings numbers were quite encouraging. Coke up 3%. They raised their full year guidance. They showed some encouraging sign in terms of managing costs and margins, which is exactly what investors want in this sort of climate. As I said, the shares up by around 3%. Today, Pete, a big day. We've got the quarterly CPI figures to look at. So there's always a lot of numbers to unpack with these figures. For the average person who just wants to get a sense of what they are and move on with their life, the number to look for is 5%. So that's the rate of underlying inflation that the markets are expecting within these figures. If you see a figure north of 5% for that underlying measure or trim mean outcome, that's going to be a little bit problematic as far as stocks are concerned because it'll introduce that conversation around rate rises.
So when you say north of 5%, I mean, are we looking to being a likely rate rise on Melbourne Cup Day? Is that what you're saying, Tom?
If it's substantially north of 5%, then the prospect of a rate hike on Melbourne Cup Day becomes greater, that's for sure.
Okay, that is the magic number. Tom Piotrowski, thank you.